Hey folks, Dan Frio here with your market update for August 16th, 2024. An update on my mother. She did pass yesterday at 120. That's why I didn't do a market report last night. And I will be leaving today to go back to be with the family. So thank you for all the well wishes to my mother. She's actually my mother-in-law. Here's the obituary that was posted yesterday. Fantastic lady. I've been married into this family for 35 years. And actually, I married my high school sweetheart. So I've known this young lady since I was 15 years old. So she's just like my mother. So she'll be dearly missed. So thanks for all the kind words. I greatly appreciate it out there. So I'll be leaving today for the funeral. So I won't have a report later today. And I'll be back next week. And maybe I'll show you my hometown. It's a small little town in West Virginia you guys might be interested in. So without further ado, let's get over to today's rates and what's going on in the markets. So mortgage rates popped a little bit yesterday because of retail sales. They were much higher than expected. Well, now what we're seeing is home prices aren't going to go anywhere downwards. And the reason being is there's just no supply. And I'm going to show you in today's video that the permits are not there. Builders just aren't confident that they can sell their homes. And then also on the delinquency front, you're going to hear a lot of things. Oh, delinquency's up. But I want to give you the facts behind all this information so you guys can make a prudent decision when it comes to buying your first house or when might be a nice time to refinance your home. So let's get over to it. The economic news we have for today is right through here. If you just use Bloomberg Economic News, there's nothing. Okay, you see on here, there's nothing for Friday, but that's far from the truth. If we get over to here, here's where the shocking news comes in right now. Housing starts, and I look over this side because that's where my screen is. So sorry, folks. Look at the housing start numbers right through here. The last reading was 1.35 million. It was revised to 1.32. It actually came in at 1.23 now, so much lower than expected. Here's where it is. Housing starts. Month over month, last reading was up 3%. It was revised to 1.1. Now it's negative, almost negative 7%. So there's not a lot of houses going to be coming to the market. You can see right through here how many houses are getting built. Well, last reading was 1.45 million. It was supposed to come in right kind of in line. It was much less than that. And then you can see right through here, building permits. They're way down. They were up 4, now they're down 4. So we're not having any new houses, really, or not a lot of new houses coming to the market. And then on the other side of the equation, you're going to have this. And this is where people are going to say, okay, look, mortgage delinquency is spiking. You have to know the truth, folks. So the MBS mortgage, well, just so here, mortgage news delinquencies. If you scroll down through here, you're going to see all the data. But right through here, it says the primary concern is the increase from people going from 30 days to 60 days. And that has popped up about 2.3%. But how many houses are really going to come to foreclosure? Well, that was just out recently. Mortgage delinquency is in the second quarter increase. But if you go down through here, delinquency rate was up 3 basis points. 3 basis points, so that's hardly anything from the first quarter of 2024 and up 60 basis points from a year ago. But if you scroll down here, you're going to see, meanwhile, serious delinquency loans, those 90 days and more, fell to the lowest level since 1984. 1984, that's crazy. So we have the builders reluctant to build houses because they're like, people aren't buying right now. So you would think, okay, house prices will dramatically decline. Well, that's not happening because the supply isn't there. So if you want to buy a house, it's really hard. I had one of my daughter's friends stop by yesterday, and they're looking at houses in our neighborhood. There's only like a handful of houses available. So if you want a house in the neighborhood I live in, it's really hard to find. And when they come up, they kind of go like hotcakes. So that's the problem people are facing right now. You don't have a lot to choose from. And then when you do choose it, the housing affordability is really tough at that point as well. So that's where we're seeing today in the highlights with everything that we have. We go over to the stock exchange. I'll just take this for what it's worth. We had a huge rally. Just think, about 2 weeks ago, we had that huge debacle with the carry trade. All the indices just plummeted. We had the Dow Jones down 1,100 points that day. We've added that back plus another 900. So this is just within 2 weeks. So a huge run up. So I'm expecting this is getting a little frothy, folks. So I'm actually taking some money off the table when it comes to my investments. I'm keeping all my cryptocurrencies, but I think the markets right now are a little lofty. I'm expecting a turn down in the economy. I don't think the jobs market is going to plummet, but I'm just putting myself in a position, financial position in equities to just kind of take some off the table. And at this point, because I just think the stock market's a little overpriced right now. So that's my concern with the equity markets. But in the bond market, when it comes to mortgage rates, that's what you're here for. Let's go over to see what that's doing right now. We go over to here, and the bond market kind of likes some of this information coming in today. So we have the MBS's up 9 ticks. What does that mean? Well, mortgage rates will tick down just a little bit. So we might be seeing about 6.55 here today. So that's what we're expecting right now. Nothing really to hiccup the markets in the either in the equity markets or the bond market, because there's not much news today other than the retail or the report when it comes to the housing starts and the housing permits. So that's what we're seeing in today's market. Let's go over to the CME FedWatch tool. I know I told you guys I'd do that every day, but I wasn't prepared this morning because I'm packing to head back right now. So in 33 days, the Federal Reserve is going to meet. What are they going to do? Well, let's scroll down to that. That's how easy it is to find the CME FedWatch tool. Let's go down to through here and see what the probabilities are. Now, the probabilities are back up. Well, I told you so. They're over 70%. Sorry, I got a new camera and it puts me. It centers me. So there's a 72% chance the Federal Reserve will cut rates 0.25%. That's the bandwagon I'm in. I don't really think it's going to be major in the markets. It's not going to push mortgage rates way down from here, but the rates are basically peaked out at this point. So I don't see them going any higher from here. So it's kind of, stagnant. We're going to see stagnation in the housing market, and I think stagnation in the bond market, and rates coming basically where they are or maybe a little bit down from here. So that's what I'm expecting. I don't see any huge changes, and I don't expect the Federal Reserve to come in and make any last-minute changes to the federal funds rate or doing any kind of intermeeting emergency cuts like a lot of people were predicting last week. So I'm just expecting the markets to kind of settle from here until there's some more data that really puts us into the next level, up or down. So that's my report for today, guys. But thank you so much for watching. I'll be back next week, but I'll try to maybe do a little live thing over the weekend to show you guys where I grew up. Just some snapshots of, I grew up in a city that was basically, here's where it is. There's a big mountain, and then on the other side is Ohio, and then a couple miles this way is Pennsylvania. Pretty cool views. So I hope to share that with you maybe over the weekend to show you guys where, I'm from. So basically a title, what I'd like to explain who I am is I'm a son of a steel worker. My dad was a steel worker, and I'm a son-in-law of a coal man. So my in-laws, they worked in the coal mines and so forth. So I'm just a steel mill, coal mine kid, trying to make a difference out here for you guys when it comes to buying your first house. And my goal to you and my truth to you is I'll always be honest and truthful to you. I won't sway one way or another. If the markets are crashing, I'll let you know. If the markets aren't crashing, I'll let you know. I'm not here to fearmonger. I'm here to give you the truth and nothing but the truth. So my name is Dan Frio. I do this report usually about 2 times a day to inform you guys what in the heck's going on with real estate. Because when I bought my first house, I was completely clueless when it came to this. So that's what I'm trying to give back to you guys, to say we're here to help you. Okay, my name is Dan Frio. I do this report every day. I'm just a loan officer here. I do mortgages for a living. I've done it for 35 years. If you're looking to maybe buy that first house, buy that first investment property, maybe refinance, talk about reverse mortgages, we'd love to be your source. I work at ServBank, so that means I'm federally licensed. ServBank is a federal bank, so I hold a federal license. I can help you anywhere in the whole country as well as Puerto Rico, and I'd love to be your loan officer. So how do you reach out to me and my team? Well, go to therateupdate.com. Here's what you see. But if you're looking to buy that first house, what I'd suggest you do is hit the grant finder. This is going to find you grants throughout the whole country, right through there. And we just added in the Chicagoland area. The Federal Home Loan Bank of Chicago just gave us $1 million to use up by the end of the year. And we're going to use it in $10,000 increments to help people in the Chicagoland area, help them buy homes. So if you want to qualify or see if you qualify for that, check that out. But if you want to get an application started, there's 2 steps to do that. One is you can click the Apply Now button up through there, or what you can do is scroll right over here and scroll down, and you're going to see our phone number. It's an 800 number as well as my email address, and it is right through there, folks. But I will be out the next couple of days, so if you email me, I'll put an auto link back to there to who you can reach out to via email or phone call in my replacement for now. So thanks so much for watching, guys. God bless. Have a fantastic day and weekend. And don't forget to give somebody you love a hug today, because you don't know if they'll be here tomorrow. So take care and see you next time. Bye-bye.